Very well. Welcome, everyone. I'm Giuseppe Basile. Welcome tonight. We have Desi Jake, FXB. We have BW, Backton, and I see that there are others coming in today. Welcome. Good evening, good afternoon, and good day. Good morning to everyone. This is the FX Street Tokyo Open live room, and this is a daily show where we feature real trading and real levels where algorithms, smart money professionals are ready to act. And this comes at the very heart of the Asian session with me, FibStalker. It's a daily show from Sunday to Thursday from 8 p.m. to 9 p.m. It sometimes happens that we take position during the Tokyo session, especially early in the week, and we take profits in the Tokyo session, as it happened this week with the US Japanese yen. So welcome, and let's start. I see George there coming in. Thanks for joining in. And as usual, I want to remind that trading is risky. I take trading seriously. In fact, my first rule is risk management. I really believe that traders' job number one is to manage risk. Once you have managed risk, everything that comes is gain. So the opposite is a big mistake, I believe. Thinking about gains before and then risk, it's totally suicidal in this business. So trading Forex and its derivatives, futures, options, and CFDs, and other instruments with retail off-exchange transaction involves substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of futures. So please also review the FX risk disclosure on the website. The information, including commentary, trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. The information I'll give in this presentation and webinar are for educational purposes only. I will take some trades, and if I do, you're not obliged to do that. Indeed, what I suggest is that you paper trade these ideas. I, Giuseppe Basile, FibStalker Consulting Incorporated and FX Street will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. Okay, so as you know, I'm one of the premium and glad contributor to FX Street. This year, a number of very good experts have joined the group. We have some of them here. I also hold twice or three times a year my FibStalker Methods coaching program. This is a high-quality program with individual attention in which I actually lay out the three areas of that characterize my trading. The mechanics of trading, in which I actually explain how I look at price and how I time and how to find the levels where I need to be involved. The second area is building your trading system, and I help you understanding the importance of a trading system, and then I help you writing your trading system based on the FibStalker methods and the trading system I give you. And the third area is working with you with your minds, because psychology, we know very well, it's 70% plus responsible for trading results. And I call that profitability and consistency. So if you're interested, look at the link above the video and send me an email if you want more information. I'll be glad to provide information to you. All right, so welcome in. I was just doing this introduction, waiting for others to come in. Thanks a lot for joining in, so we can actually start. And as usual, I'm gonna dive into the charts, and I want to make sure that first of all you can see the charts as well, because without that it's a little bit difficult. And here I am. Thanks for joining in today. I'm happy to share with you another session here where we're going to look at the market and see what these markets are going to bring us. All right, so you should be able to see now the charts, and as usual, you know this the format of this webinar is always very open. Hello, Pankaj, thanks for joining in, and it's very open. You can you know I always answer questions. I never shy away. Actually, I enjoy doing that. I enjoy being challenged as well. So bring your questions, and we're going to review this market starting from. Well, I would like to start from the US dollar Japanese yen, because you remember that I mentioned that this market was moving lower, and I also mentioned a very important level that was actually pierced together. And it's sad to say it, and that level was 112.12. Look at this long bar that recovered after breaking that level. So the level is gone, but most important in this market, and you know, record my words here. Um, there is a lot of fear in this market and in these markets, and as someone is saying here, very violent moves, absolutely high back ten, absolutely Bankai, very violent, and that's unfortunately is a sign of fear. And we know very well that fear is one of the three major emotions that drive the market. We have fear of losing money, fear of losing an opportunity, and greed. These are the three emotions that tend to move the market. And emotions are always, in all the fields, are the worst friends, if you want, the worst counselor we can have. When we act in any endeavor of our life, in every aspect of our life, we act out of emotions, something is wrong. And definitely, totally, uh, positively, when we do this in the markets, we are really in big trouble. So see other traders are joining in here. Backdown Joe, hi Joe, and so what we are saying here is that the 112 is now gone. Okay, so we have a lot of fear, risk of these markets. There's no interest in this market. The carry trade might be a winding, or you know, there's no more interest in that at this stage. And I believe that the SP 500 will follow suit here. Okay, now what is important is that in this market, and I see also FX Ambassador, Jax, thanks for joining in. In this market, there are no weekly longs. They're all gone. There are no weekly longs. They're gone. Okay, so any rally that we're going to see in this market is going to be short-sighted and short. It's not going to last for a lot of time. Okay, so there are two levels I'm going to watch for a continuation of shorts. And continuation of shorts, as we mentioned yesterday, you know, 170, that's the level. Eventually, we're going to see this market there. Okay. This market is not going to leave us out, as FX Ambassador reminds there. That's absolutely correct. And there are two levels we are going to watch and we are going to profit from. Okay. That's a promise. 116.34 is the first level, and if the market gets there and offers us an entry point using the FibStalker timing, we're going to take that opportunity. The other level, it's 118.42. That's the level that we could get. Okay, and now let me show you a beauty. Okay, now if I just look at this level here, look at this beauty. Okay, and you can see that you know, the second target of this level lines up almost with the with that level of potential bounce. Okay, so we're going to look at these two levels, and you know, I personally going to risk a unit of risk to test whether 116.32 is the one. We don't know which one is going to be the level. If you hear someone who knows for sure where the market is going to reverse, turn the other direction, and run. Okay. When there is participation, we can know that, but it's always an experiential kind of thing. It's an experience. We don't know that in advance. We only know the levels in advance. Whether there will be participation at the level, we can only discover it when the market gets to that level. Okay. Are you seeing more down in the yen crosses? Euro yen and pound yen? The answer is a resounding yes. Yes, absolutely. But not before FX ambassador, not before a bounce, as I'm explaining here. I see others coming in here. Beckton, Mervin, Lee, thanks for joining in. And some other traders see that for some reason I don't see them on the list there. So what we have here then, it's a potential for profit taking here that can be very violent as well and can bring price higher into one of these two levels. Okay, I don't believe this market is going to continue lower here, and this the fact that it's not going to continue lower, my offer a potential hope, which unfortunately I believe it's only a hope to people who are looking for a bounce in the stock market as well. Okay, so the reason is these two markets, the US or Japanese yen, the SP 500 futures are very well connected, and I know I know you want to focus on Forex, and that's absolutely correct. But I think we are at a very important juncture, and you will forgive me if I keep talking about the SP 500 here, because if you are a serious trader, and if you're a trader, or generally when you will be a trader or a serious trader or a business trader, or however you want to define yourself, there is here a fact, and the fact being that opportunity will come in the coming weeks, not only from Forex, but will come also from the stock markets. And I believe, of course, I can always be wrong. The market can always prove me wrong, but I believe that this cycle, up cycle for the stock market, is coming to an end. And in a way, as we also mentioned yesterday, the US dollar Japanese yen is kind of anticipating that. Okay, if you put this market one close to the other, the US dollar Japanese yen has already confirmed this strange idea of actually wanting to correct to 107, and then what we can say here about the US dollar Japanese yen is that it is showing the same pattern here. Okay, very, very similar pattern, as you can see. But now the level, of course, do not match and they don't correspond exactly, but this is risk off, that 112.12 it's gone, and now we're just going to wait for a retrace before pounding in this market and punting in this market. And this market could give thousands plus pips in gains very, very quickly, okay, in a matter of weeks. So see, I mean, we can focus on the 100 pips or on the trade here and there, but these kind of opportunities, they come once a year, okay? And when they come, maybe sometimes they come with less frequency as well. So whenever they come, I want to stress the point, this is the kind of swing trades you have to get involved into, because that's where the money is. Okay, and I think this is only makes only. I mean, it's only common sense here. I'm not saying anything strange. A retest of the lows is possible as well, as FX Ambassador is saying here. However, I'm not going to get involved long, okay, in this market. And the reason for that is, if there is any fear coming in, this market might not get to the levels that we're looking at, okay? And if that's the case, of course, we would be able to enter as the market keeps moving lower as well. However, I'm not going to trade the counter trend here. And mind, the counter trend may be very, very sizable, okay? And you might believe it's a mistake to not do that. Now, as FX Ambassador is suggesting, if a double bottom, kind of double bottom, is actually shown here at some point, one could also consider taking a small position and bringing it up for a couple of hundred pips. But mind that would be counter trend trading. And do we need counter trend trading? We don't. I mean, if you always trade in the direction of the main trend, you'll do very, very well, actually. And I actually traded a counter trend trade indeed, and we made money on that last week. But it was a counter trend trade on a weekly time frame. Okay, so on a weekly time frame, which was this move that we traded from 121 to 1490. And that's where we got the first bounce, and then the market just continued over. So in a way, I'm almost contradicting myself. But the reason why, I traded that because it was a counter trend in a weekly time frame. Okay, so a counter trend on a daily time frame, it's a little bit. I mean, in this case, would be a counter trend higher. Would be a little bit. Would be would be riskier, but not something that we would not consider. Okay, so great opportunity shaping up here in this market, maybe in the next 1 to 3 weeks. That's something you don't want to lose because there are thousands of pips here to be made. And obviously, and I like, so you will see me putting this market one close to the other very often in the coming days for this reason. And as the US dollar Japanese yen has confirmed that level, eventually, we don't know when, the SP 500 will pierce the 1797. Now, the thing here is that if this market bounces without continuing lower, and that's our hope as well, because we want to get involved in this price short and at higher level, they're going to be safe as well, because they're not going to be retested very, very probably once this market will continue selling. So what we really want to see is this market bouncing from these levels and actually moving higher, and then an opportunity to be given at those two levels that I showed you before. So those are levels to keep watching closely, and at those levels we're going to manage risk properly. Okay. Now, as I said, eventually this is going to happen to this market. Now, if this US dollar Japanese yen bounces, this may give some hopes to bulls here in this market, because maybe for a few days the SP 500 also might bounce. Of course, the SP 500 might pierce this level tomorrow, and we can kiss goodbye anyway this market. But even if there is a light bounce here, I believe that eventually we're going to break that level. And this is very, very important, because on the SP 500 as well, on leveraged invest ETFs, there is going to be an important amount of money being made here. Okay, so now we do not look for that. We do not look for this behavior. We know that attached to this behavior there will be distraction of wealth of a lot of long only portfolios, stock portfolios, and that's the 90% of the market, and that's that's sad if you think about it. But not taking a position will not change the state of the market and the fact that there'll be a lot of people losing money in this market. So someone asked me, and a lot of people these days are asking me, what would you do now? Just exit my long portfolios. Okay, just go out. There is time to be in the market, and there is time to be out in the market. I said, yeah, Giuseppe, in the DAX we have already kiss that baby goodbye though. And as I mentioned, not all the markets are in the same condition, but all the markets, that's true for the Italian market as well. While not the market are at the same confirmation level, all the markets have a high correlation index. So that just means that the DAX has to go much, much, much lower, okay? And we'll follow what Mr. Marketeer Stock, SP Stock 500 has to say and to do. So FX Ambassador say, I don't trade counter trend, and FX Ambassador, that's a very good idea. I think you understand the importance of trading with the trend and trading in the direction of the path of least resistance. That's very, very important. Unfortunately, a lot of people don't even have an understanding of what is the path of least resistance, and that's a fact, unfortunately. So a lot of people are going to look for long because they're going to trade their hopes and their perception, but they're not going to trade price if they get long here. And there will be a lot of people that will do that, unfortunately, out of hope, out of misunderstanding, out of and I want to warn that it's not a time to go long stocks, it's not a time to go long US dollar denominated pair. And it's time to just wait for a reaction there. Okay, so I see some questions there. Are you seeing more down in the yen crosses as explained for the US dollar Japanese yen? The answer is yes. And for the pound versus yen, yes as well. I mean, this market confirmed that willing to get into 166.40, 56.40, which is the level that I mentioned. And look at how close it went, less than 400 pips, today, intraday. Okay, so this market, in a way, it's anticipating what the US dollar Japanese yen is going to do. Okay, that's exactly what is going to happen with the US dollar Japanese yen. It's going to be a reaction, which we already saw here, 2 weeks of reaction here, and then a continuation lower. Whether it's 2 weeks or less or more in this market, I don't know. And to be honest, it does not affect my trading because time doesn't affect my trading, levels do. And when the market, I can wait, when the market will get there, I think we're going to get something similar here. Now, don't fixate yourself that it's going to be 2 weeks or 3 weeks or 1 week. We really don't know. What we're going to trade, are going to trade levels. I'm not going to trade time. Okay, there are people who believe that there is a relation between price and time. I don't believe that at all. At all, market can move very, very quickly. I think this week is a demonstration of that. Look at this long weekly bar. We're talking about 117 to 110, 700 pips of reaction. If this is not fear, you tell me what is this. Okay, this is fear. And are we going to get involved here again? No. And the same here, pound versus Japanese yen. The pound versus Japanese yen might get there to 156.40 and react when the US dollar Japanese yen starts reacting. We don't know that. Okay, but the best, I mean, in this market, the position was, was this 50% here, obviously. Okay, and we mentioned that 188, and then the market continued lower, and then it broke this level but continued lower as well. It's going to go into 156.40. All right. So any other questions on these two markets? We reviewed again the US dollar Japanese yen and also the pound versus Japanese yen here. All the other markets are kind of going either with or against the US dollar, and of course the euro. It's being propped up. It went into that target that I mentioned at the beginning of the week. I haven't stayed with that trade myself. I actually exited for 5 units of risks. There were 8.5 to be made in this trade, 1680. sorry, 1380 I mentioned. 1375 was the level here. So this market is coming back. And again, I have two levels for this market, depending on what the dollar is going to do. I think this market is going to keep trading in extensions here, and we will see 12, 17 trading here very, very soon. Obviously, if the US dollar Japanese yen has to go down, this market has to go up. And I believe, as explained yesterday, the euro dollar is going to go up to 122. That's my projection that I gave you yesterday as well. So this market are actually setting up for the next moves. So at the moment they are very, very risky, because what they're going to do, they're going to take profits, long or short, and would leave you with a loss if you were to continue at these levels. George is saying yes, but DAX goes much lower due to the correlation. The American stocks will not follow. Actually, it's the opposite, George. Who leads is still the American market, believe it or not. And the only difference is that the American market in the last 2 years has actually corrected laterally here, while the markets in the last year, I would say, all the 2015 here has corrected laterally, as you can see. And Wall Street, make no mistake, Wall Street has been selling here the hell out of the stock market. Make no mistakes. Okay, and while the other markets, take the European markets, the DAX, the MIB, MIB, Thailand MIB, all the European market, because they have a weaker economy, although I wouldn't define the US economy stronger, unfortunately. They have corrected down. But when this guy is going to start correcting down, not laterally, it will depress even more the DAX. The DAX is not the leader, sorry. The SP 500 is the leader still in this phase of the global stock market. Maybe at the end of this crisis, at the end of this, it's not a crisis, the end of this cycle here, maybe things will change, and other Eastern country will take the lead, like China, or who knows. But DAX is not the leader, SP 500 is the leader. I have any thoughts on Canadian, Japanese yen? I see Don here. Welcome, Don. And we comment on this, I believe, yesterday. And this is not a pair that I usually follow, and the reason is that it's not really technical, and I honestly wouldn't see, unless you have an edge and a particularly good system that works with this pair. I don't even have a lot of data here. I don't see big edges in this market. Okay, so the only thing that this market is going to tell me is telling me at the moment is that it wants to continue this correction that it started. And obviously, because the Japanese yen now it's actually correcting Japanese yen is actually correcting higher compared to other currencies. This market wants to go lower, so this market is going to go for sure into 76 here, 75, 60, and it has the potential to revisit lowers at 70, 13 here. Okay. Buonasera, Don. Thanks for joining in. So this is for you my view on the Canadian versus Japanese yen. There's no way this market is going to reverse. If it puts a bounce, that's an opportunity to sell into 75, 60. That would be my take here. However, I mean, we tend sometimes to fall in love, and I'm just taking this as an example, Don. I'm not saying that you necessarily felt in love with Canadian Japanese yen, but I try to be very, very selective, and in my in my studies, identified a number of pairs that I always watch. These are the pairs that to me have the best opportunities of working, at least with my method. And there are some European plays, some North American plays, US dollar, Canadian dollar, which we're going to discuss next. Then there are some Pacific plays. They're very, very good. And particularly then, let me Don, if this is okay with you, if you have any other questions in relation to the Canadian Japanese yen here, I believe that like all the others in experiencing fear here, Japanese yen being bought versus Canadian dollar being sold. And there is another notable pair where this is happening. Well, I kind of like it because I use it every day. FX Ambassador is saying I don't like the Canadian dollar. Now, I don't know if he doesn't like generally the Canadian dollar itself, or you don't like the Canadian versus Japanese yen. But I have to say, you're very welcome, Don. I have to say that this market has been treating me very, very well. The country has been treating me very, very well, and I have no reason to still have. I think this market is very, very. Sorry, some of the pairs that involve the US dollar, Canadian dollar, that involve the Canadian dollar are actually very good pairs. So, and no reason to believe. And of course, now I will talk about my preferred pair, which is some of you that have made me notice this during the week. There is one pair I love. Actually, I'm not in love with US dollar Canadian dollar. I just believe that this is a terrific setup from 137.62, which has traded, and believe it or not, it's going to be 158, and that's where I'm going to remove my targets, my profit. So I'm going to keep these trades, and I'm going to add as opportunity will be offered in this market, as this market is going to continue higher. Now that's a conviction based on my past, trading and studies. It's not a conviction because I want to be right. I have no interest in being right. And by the way, in this market, I can be wrong at any time because all my trades here are risk-free trades. So it means that if the market stops me out, for example, if it goes below this low, I exit at break even only with the cost of trading. So I think that should be, and I don't say this to boast, I say this because I believe that should be the normal way you trade. Every time your stop loss is hit, you have to maximize the number of times that you exit at break even without moving your stop, though. That's the difficult part. You have to exit at break even without trailing, without moving your stop in the direction of the trade. And there are techniques to do that, and that's very, very important. It's a risk management edge, and I believe it's very, very important. Don is adding there in relation to the Canadian Japanese yen. I thought would bounce because of OPEC news, but oh well. Well, Don, news are news and news. So news are factored into decisions that are taken on price 1 month before. The news are not really news for those who are in the know. I mean, let's make this straight. I mean, news are not something that provide an edge. Okay, and the same news we know very well can move the market in one direction or the other, and Forex is not different. So and I'm not necessarily picking to you, but because if I have to contribute something in this series, in this room, is also to try to comment on different ways and beliefs that can work in the market. And I'm not necessarily picking on you here. I'm using what you say just to provide an example. I have no expectations for news on my trades because algos and professionals, they are positioned very, very often, not always, but the majority of the time, in the direction of the news. So we just need to read the markets in reality. We don't have to look at we don't have to wait or look at news or interpret news, which is even worse. And actually, if you think about it, and again, I'm not picking on you, I'm just using this as an example. Reconciling a new news with the market, it's not different than reconciling an indicator that you add on a chart with the market. And we know very well that the more indicators you have, it's not that you have consensus and all these strange ideas that comes from the trading books, because if they were true, 95% of people will not lose money in the market. So there has to be something different that characterizes a trader, a losing trader, from a winning trader, consistently winning trader. So this is just to say that there are some prevalent ideas, like interpret news and try to use news as an edge, that might not be useful beliefs for our trading. And I'm just dropping that as an idea there. I'm not necessarily thinking of Don or generally. It just gave an opportunity to express my thought there. All right. So if you have any other questions, please keep writing them down. I mean, this is not a monologue where I just talk about the market. This is interactive, and I like the interaction. And today we are getting a lot of interaction. So keep doing that. So George is saying, and all these things happen after BOJ went negative. It is funny. Yeah, but one should think whether that is the real event or there was a timing for these things, right? And I'm open to both of these ideas. Clearly, BOJ has represented something, has represented a turning point. But would you say that? Look at the stock market, even before that, and we can go back a few weeks here. Even before that, right? Before BOJ, look at that. Look at what the market did. Went to retest again an important level. Now, if this level was real, we would see this market just moving higher and getting into the first and second time and go on. The fact that this market has been retested even before BOJ, right? It actually means something to me. Now, this does not mean anything until the relevant levels are pierced, okay? Because we saw multiple times, and the dollar index is an example here, these important levels being tested again. And if you think that I'm cheating, and if you think that I cheat, right, and I trace those levels after the fact, right? Let me show you something. This is the high to new high to new high to eventually new high, and then the market start coming back, sorry, to new high, and I didn't know the next week what would happen. And look at what happened the next week, the coming weeks, okay? So we knew this level in advance, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in advance. Bam, bounce, 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 and it's going to be the next bounce. Okay, so there is no cheating here. We know this level with months, sometimes weeks, sometimes days, depending on hours before we get into these levels. Okay, so why should I be worried? Why should I be worried about this level if it has traded and there was participation? The market can do anything here, and same thing is here. And Ambassador is writing, I love your confidence and focus. Thanks a lot, FX Ambassador. You did my day. That's what I do. I study the market, and I study price, and that produces confidence. It's like when you go I mean, if you sell lemonade on the street, just to make an example, of course you don't do that, but you have to be convinced that what you sell or what you do in your business is significant, right? I mean, this is my business. I mean, I trade, and if you don't have that level of confidence, you cannot simply trade because you will not have the confidence to do that. Now, there are some other confidence builder that are other instruments that I use to make sure I never blindly buy these levels. I need to wait for confirmation. But as you know now, in the market there are several algorithms on all time frames, and what the level of commitment of those algorithms, one way or the other, one direction or the other, counter trend or in the direction of the trend, give you a lot of hints of what's going to happen next. So Japanese are back tonight. Now, there is something I have not done at all this week, or maybe I did, but I didn't spend a lot of attention on that. So let's review. At the beginning of the week, there were no news, and at the let me see here. I want to show the news that are upcoming today, and that's my. I don't know if you should be able to see. I don't know. You see myself probably. So let's show this. This is the news that I collect every at the beginning of every week, as you can see here. You should be able to see this, and these are the news for this week. And as you can see, Sunday, Monday, and Tuesday we had no news, and then we had Wednesday we had pound US dollar. So Thursday 8:30 a.m. So no news at the Tokyo Open here, and we are going to have no news at 2:30 a.m. And then the American session we have I think that yes, Yellen testifies tomorrow as well. So we have to be careful with these pairs. Yeah, these are only some of the pairs because these are only the ones that I follow. And then on Friday we will have the German preliminary GDP, which might have some importance, and then again the US dollar. So as I mentioned, this week the best trades would be as usual when there are no news, and here we took the euro dollar trade as well. So that was just to give a refresh there on the news, and we can go back to the charts here and continue. And there's also some other questions there, so let me have a look at those. Here we go. So Japanese are back tonight. I don't know if FX ambassador is making a reference to price of US dollar Japanese yen. All the pairs that are connected to Japanese yen. That's good if they do. If they do, they're gonna help price into the next level short. So don't even think 1 minute to go along this market, and I know that you don't, but you cannot have US dollar, Canadian dollar in 158 and Euro dollar in 122 unless crude goes to 5 US dollar. Well, George, let's see. What can I tell you? To be clear, I like your trading US dollar, Canadian dollar. See, the way I see it, that's totally possible, right? But there is one caveat in that sentence, and the caveat is that the markets will act rationally. Okay, now energy is 30% of the Canadian economy, and we understand that. But even if price of oil stay to the current level, because I don't think price of oil are going anywhere. And yesterday I mentioned the analysis of the CMC market strategies that I really respect a lot. And and he mentioned clearly that if you look back at data, history data, you see that um, the the oil is not going anywhere. Now the point is, can we have US dollar Canadian dollar moving higher even if oil remains at current price? Maybe we can. I don't know. And actually, the point that I want to make anyway is that I treated this pair technically as I did in the past. See, the way I see is that if this trade, um, uh, had to reverse at this particular juncture here, it would have failed. Um, after the BOJ, which didn't happen, right? So why algos have spent millions, hundreds of millions supporting this price? Because that's the reality of the facts, right? There is some people who has put a big bet there. And so, I don't know who these people are, but in the past they've shown an incredible consistency. So I'm gonna stick with them, and we will see. And it's not about ego, as I mentioned before. I don't mind being wrong, because what I mind is not losing money when I'm wrong, because I'm wrong often. I say a lot of wrong things as well, right? The point is, we all make cases and we take trade based on those. I still believe this is possible, but and I know that sometimes, we look at things and say, I don't understand how, from a fundamental point of view, this could happen. And yet, the market moved technically. So thanks for bringing that up, because it's very important to point, George. We have, I like to Giuseppe. That's why I make some weird questions. So that's good. That's good. And we are two of us now. I can say now, every time I start, I can say I and George, we love this trade, and that's why we spend some time on it. So I will actually introduce US dollar Canadian dollar like that in the future, George. So hi, what software are you using? Google. What software are you using? Google. You mean I'm using, I don't know. I mean, I'm using Google Hangouts on Google Chrome. I think so. Nice. It's very clear, and you sound good. The picture is also nice. Yes, probably that's the reason. It's Google Chrome, which has Google Hangouts built in. So I think it's the best. It's the best way to go. All right. So let's make a time check here. Do you have any other Google Hangouts? And I think that's the answer. And YouTube. So that's what FS uses for it. I think we're digressing here. We were supposed to dive and swim in the markets here, but I believe this discussion is very, very important. And the week here is winding up. I do not anticipate anything special happening now and between now and Friday. And actually, I don't trade on Friday typically as well. So I think that there is a little edge in the afternoon. The algorithms are shut down as well, so you don't get the same moves. And to be honest, I mean, this week was a very good week, so I don't think we have anything to press. We have to remain disciplined in that as well. Okay. So we talk about US dollar Canadian dollar now. On the daily, you see this lateral move here with a high drift. Again, not impressed and not worried about it. One could say, "Hey, wait a moment!" But you always speak about the the continuation style, and you told us that there are some pattern, and and now we see a move lower here, and this is a consolidation, so there should be a continuation, isn't it? So yes and no. I mean, if you and not because I have to support my trade, of course. I'm being very honest. I'm always very honest when I speak about these things, because if I'm wrong, I'm wrong, right? I mean, if the market proves me wrong, I'm wrong. The point is, consolidation can be continuation patterns, but can be inversion patterns as well. And this continuation is not happening anywhere in the chart here. It's happening on top of a level, an area of support. Okay, so when that happens, the probability that consolidation is indeed an inversion, it's actually higher. The probability for that is actually higher. So even if we go and retest this 137, so even if we break here, I would never take a trade using the continuation style on top of an area of potential support for that price. I mean, that it only makes sense, right? And so once I started integrating, the algos in my trading style, I started also seeing the difference in the quality of consolidation pattern. Because while this consolidation pattern here makes sense, right, and gave us a beautiful continuation, because there was the space to do that in this market. The second target was here at 141, right? So there was still some space for the market to go. But here, right, when we look at this, and look at this beauty here. These trend lines are strange sometimes, but even if this market this market breaks, it would not trigger for me a short, obviously. Why? Because of the trend, what I call the trend placement, where this market has actually created that consolidation there. And one question on euro dollar, and so that we can close here. One question on euro dollar: do you have any clues on price action or your levels that show you that the price will not be rejected again at 114, 115 area? I believe you're going to get a reaction before that, and there are two possibilities. Either the market reacts a little bit and continues in extension, or reacts quite a lot and it goes back into the mid of that lateral move, and we can actually then see and then we can actually see that that's the level I showed. I think we're going to see almost certainly 12.16. And I will use the FibStalker time in there to decide whether I'm going to go long for a continuation, or this market is going to correct in the middle of this move, and that is going to be a long. That is going to be a long for the euro, and that's going to be a short for the Japanese yen. I hope that answers your question. Can this market continue in extensions higher? Sorry, so can this market continue in extension higher? Well, it might. It did that in the past, but eventually, this market is going to come for a full 50% retrace. I actually have done a specific study on this, believe it or not. I've done a specific study on this. I made a mistake here, clearly. So let me see if I can show this on the weekly here. I made a specific study on this, and this market will always come to trade the old way back after a correction. An example would be this one, okay? We'll always come at some point to retrace that. Of course, we don't want to wait too much, but eventually it will. So this market could continue like a train here and then eventually come back before it gets into 122. Okay. As an Italian American, I sometimes find myself a bit capatosta, which is hard-headed for trading. I sometimes let my ego get in the way of trading. Do you think cultural values can hurt us? So probably I may hold a loser too long. No, that's simple practice and the way you consider trading, Don. Very good point. Trading is a business. If you're holding a loser, you're not doing good business. It's like you are building a house and you know that you're going to lose money on it. Would you build a house or would you stop and try to renegotiate? Okay, so it's not a cultural thing. I mean, I'm Italian too, obviously, and I had this issue in the past when I started trading like a business. I know that I could not allow and even keep losses, right? And in fact, if I have hard stops, okay, I have to be very precise. I'm also an engineer, a computer science engineer, so I have to be very precise because that's what my that's how I'm built to be. I need to be right. I need to be precise, and that's the reason why I came with the FibStalker timing. Okay, so it's a learnable skills. No doubt about that. And so don't worry about that. Now, before I would love to keep answering this question, but we will talk about gold on Monday. I'm very positive about it. Will a correction come from here? It could. This is silver and this is gold as well. I look at the futures, the mini futures is the same. As you can see, they have same shape. Could they correct from here? I think everything is going to happen at the same time. When the SP 500 finds the bottom, these two guys will find their relative high, and a correction will start, and then we can go long this and we can go short the stock market. That's what I see here. Okay, so I'll start a recap right now, and you have hope. Don't worry about that. It's going to happen if you choose for it to happen. And my suggestion is join the FibStalker coaching program as well, this FibStalker Methods, and we will address that together. I actually directly help during the coaching program my students, so they get a direct help. So take advantage of that. That's the only thing I can tell you. So let me just modify the chart here, and then I'll start the recap. And that obviously it's not okay. All right, so let's start the recap. What we did at the very beginning, we introduced our superstar here is the US dollar Japanese yen. This market has been moving very well for us. We have anticipated every move in the last few weeks here. We anticipated the 121 level that we shorted last week. This week on Tuesday, if I remember well, we took profit, or Monday we took profits at 114.90, and this market has continued lower. We also mentioned that we were looking for a level that was 112.12. If that level was pierced, and it has been pierced, the meaning is that the weeklies are not interested in going long these markets. Okay, so what we're gonna see in this market, because that's what we always see, it's gonna be a reaction, and eventually there will be a new short to be taken. Okay, and so we're going to wait for that and time that short. We then reviewed, we actually reviewed and compared this chart with what we are seeing in other markets, and particularly we compare that to the ESP 500, which is a very important market. I will actually keep following this market. You have to bear with me a little bit in the coming days and weeks. I'll keep reviewing the SP 500 because I believe it's risk off at the moment, and these two markets will move together. I think and it's sad to say there will be a lot of people, unfortunately, will lose money in the stock market because they don't understand how the stock market moves. But I believe, on the other hand, for those who understand how the stock market moves, there might be very good opportunity for several shorts here. So we compared and we say that maybe the US dollar Japanese yen has to go lower a little bit more before we get a jump, because that would actually help the SP 500 breaking that level. We also say that if the Japanese yen bounces here, the SP 500 will give some hopes to people who believe that this market can still a hope to continue higher. I'm not that hopeful, not when it comes to the current juncture of the SP 500, and I think that this market is going to give a great opportunity here. Then I was asked to comment on the pound versus Japanese yen. This is another market that we follow. This market actually came only 400 pips in an incredible move down together from that 156.40 that we have indicated last week. So that's where this market is going. We need to understand whether this market is going to go there right away or is going to bounce before it does that. We also compared again this market to the US dollar Japanese yen, and we anticipated and said the US dollar Japanese yen is going to behave like the pound versus Japanese yen is anticipating to us. Can you see that this market has almost reached the 156 level that would correspond to 170 for the US dollar Japanese yen? So we're gonna get a bounce in US dollar Japanese yen, and eventually we're gonna get into 1,000. There is an opportunity for 1,000 plus pips in the US dollar Japanese yen. That opportunity is gone for the pound versus Japanese yen. So if you have to choose a trade or a pair, I would obviously prefer the US dollar Japanese yen. And finally, we close with the euro dollar. And we said that this market has the potential to go back to 122. The only question here is whether we are going to get a reaction now or in the future. Eventually, this market will need to come back to the 50%. That would happen only if the US dollar Japanese yen comes back to the 50%, which is not impossible. That would give us probably 119. It's going to give us a beautiful opportunity. I mean, if that happens, guys, I mean, this trade is going to be comparable in terms of potential to the US dollar Japanese yen. Okay, so if 118.41 trades, that's a beautiful short. Okay, so this is it for today. I hope you like the show. I hope you like, as someone has defined that, my confidence. Yes, I know I'm bold. And if you're in this business, you have to be, not to advance your ego or to demonstrate anything. We have nothing to demonstrate to ourselves of others. What we have to do, we have to actually trade this market in the right way, particularly minding risk, which is trader's job number one. If you think you like this show, what I ask you is to tweet about it and actually tweet the link if you can help, and we will keep this show up and running. I'll be very happy to to continue the show. I'm committed to it, as I'm committed to you and to my trading, of course. And so if you like it, please tweet about it. But even if you don't like it, please tweet about it, so that we can actually keep this experience and show that I hope will interest more and more. Can keep it up, and I think I can seriously think I can help, or I can actually suggest very good setups. I believe that all of you are very effective in your trading. And just having additional ideas will not hurt. So thank you very much. Don says, I'll be sure to be back. Thank Don, and bring your fellow traders buddies as well. And thanks a lot for being here. Thanks for Mfundo to join, even if it's a little bit late there, but no worries. We'll be here on Sunday, same time, 8 p.m. to 9 p.m. And Sundays are very important because that's when we analyze the market, and there will be very good opportunities. I can promise you. Okay, so please tweet about the show and invite your friends, and don't forget the next live show with Yohai Elam, and I'll see you on Sunday, 8 p.m. EST. Thanks a lot for being here, and hope this is interesting. Have a good day and have a great weekend. Bye bye now.